Once again, welcome everyone. Wishing you all a very happy new year. May 2025, be a year of continued success and smiles for all of you. And for you also, Anirudh, warm welcome to you and wishing you a very happy new year.
Happy
Last
New Year,
year,
Kamal. Happy New Year, Kamal, and thank you. It's always a pleasure to do a podcast with you.
thank you. Same here. So looking forward to do some insightful conversation on, how 2024 has been for INVasset. We have seen INVasset kind of came up as top strategy based on the performance in 2023, and I would say till first half of 2024 as well. And but after that we have also seen most of the quant funds, not just your fund but most quant funds, be it mutual funds or other quant funds, have kind of seen kind of a sheen kind of gradually fizzling out because market turned, I think, very confusing, and market turned like maybe beyond the trajectory of fundamentals, and quant was unable to read that. And beyond that, obviously, we also want to know more particularly from you what kind of went inside INVasset, because we had kind of, I would say, very high hopes on INVasset, because INVasset kind of went up very successfully from, I think, 100 crores of assets in 2022 to almost close to 4.5 to 400 to 450 crores to 500 crores of assets last year. So obviously all those new clients who have joined INVasset are curious. They have been contacting us. They want to know, because their experience particularly has not been good. The investors who came in the initial, I would say, 5 years, initial 3 years of your journey, they made massive returns. But the ones who came to you in last 6 months are kind of only seeing the seesaw kind of a rally, and they feel that they are unable to understand and comprehend where INVasset is kind of headed. They kind of have a lot of such feelings that they are unable to kind of connect with the strategy, and hence the concern. But I really thank you for giving us time as a first webinar for this year. It will be great conversing with you. I have set the context for obviously all those clients who are invested with INVasset and who have such concerns. Most of them are our clients. I want you to first maybe address the foremost aspect for them to maybe again kind of understand what distinguishes INVasset from other portfolio management services. What is it that they should expect kind of as an investor in INVasset? So what distinguishes you from other portfolio management services?
Okay, sure, Kamal. Let's address the elephant in the room first. Let me tell you about. Let's talk about the underperformance first of the last 6 months. Any strategy, any fund manager, any mutual fund you invest in, I always suggest my investors three things. Okay, always analyze any strategy not from the last 1 year performance but the performance of the last 3 years. That is, I believe, that the time that cycles in India take place from, you require at least 3 years to live up to the strategy as a whole. So for all the investors who have joined in the last 6 months, be with us for 3 years. We have seen underperformances time and again, be it from September 2021 to January 2021, where we were not in the market, or be it from January of 2023 to March of 2023, when there was a fall in our growth stocks. So these falls come and go. But when you are invested with us for 3 years, we check any 3 years of INVasset or our strategy tested back into the future when INVasset was not investing for clients. We have outperformed the benchmark by the 1.5 to 2x range that we ask the investors or guide the investors about. So I think 6 months is too less a period, and that does not take away the fact that we did not take the decisions as better and as effectively that we would have wished for. Yeah, and what makes our strategy unique is that firstly, we are a 32-year-old fund house. We started back in 1992 with our own prop capital, later started investing for clients, and then eventually became a SEBI-registered PMS. We are one of the only fund houses which have 100% skin in the game. We the entire wealth of the fund managers, which is almost somewhere near to what funds we are managing for the clients, is based on just one strategy. So we are very, very confident about the strategy as a whole. So whatever we've learned in this past 32 years is what we have coded into a framework that we use to invest for our investors. This framework is basically rule-based and does not have any sectoral or human bias at all. I believe INVasset is in true sense, the only multi-cap PMS out there. We do not distinguish between large caps, mid caps, or small caps. We believe that allocation of capital should be done according to the right balance of appreciation and preservation. So we do not focus on the top 200 companies out there. We actually try to find out those companies which can make to the top 200s 3 years from now. So I believe giving us 3 years is a must. I talk to every investor about it. I give three statements. When you are invested with us, come to us for 3 years. Expect a 1.5 to 2x alpha of what the benchmark is, though no guarantees about it. And we'll try to protect your downturns in bad times to around 20%. I think we protected the downturn at around 20%. And yes, alpha will be generated in the future as we have done it in the past.
Sure, Anirudh. Your recent call of going on cash has been really a bold call, and you went on cash at 24,500 levels of Nifty, and market after that went down to 23,500, and then obviously has recovered yesterday. But obviously, the market signals are mixed, because we know while economy in last 2 quarters, had shown signs of slowing down, but at the same time, how is your quant kind of reading market as way forward is the topic that we have kept for this webinar. Apart from obviously discussing your funds expectations and recent concerns, we need to understand more from future, that where are we headed in your hands when money is being managed by you, and hence it is important for you to address this part, that what made you go in cash recently, and that to 100% in cash. We have been talking about PMS as a strategy which is different from mutual funds, whereby PMS can go 100% in cash. I know we have been saying that for almost 1 decade, but I have not seen any single fund manager who has actually implemented that. But you have implemented that, which is like bold, but at the same time it needs to be comprehended, and hence it is important for us to understand from you what went behind the scene, and when will you kind of go back to equities.
Okay, so Kamal, this will be a very, very broad answer. I'll explain to you everything in detail on how I see things, and particularly to all my investors as well. See, at INVasset, we follow a value, growth, quality, safety framework. Let's have a hypothetical quadrants in front of you. First is value, second is growth, third is quality, and fourth is safety. Now, whenever the markets are in a turmoil, whenever there is everybody selling, as it happened during COVID or post the Russia-Ukraine war in back maybe March or June 2022, at that time, what happens is that there is a lot of value in the market. Everybody who's doesn't have deep pockets or has over leveraged their portfolio, they just tend to exit the market, leaving a lot of value on the table. At that time, we buy value. And we buy value only at that times. Why? Because we believe that value can be found only when there is overall value in the market. Whenever the market is in a bull run, since it is full of a lot of intelligent people and a lot of capital is out there to chase growth, value will not be left. So we buy value, which is stage one, when there is overall value in the market. As the markets, they start now, at this phase, the markets were not very expensive. They were very, very cheap, and we can say the markets were oversold. When the markets enter a new bull run, we believe that every bull run is led by new leaders, be it in terms of stocks, sectors, maybe some groups. This happens from time to time. We have seen it, say 2000s was technology, then 2006 bull run was led by capital goods and Reliance, then came in pharma and FMCG and quality came in, and now this current bull run was led by capex. So this happens due to some relative change which has happened in the market, which the market discount in the next 2 to 3 years. Finally, when the markets become expensive, we go in for quality. The quality stage is where you expect from the market a 15 to 18% CAGR, and you are okay with if it goes down in a bear run. Expensive markets can go in a bear run as well, as it happened in 2020 for us. But that time, the downturn is also not more than 20%. So your risk reward is still balanced. And finally, the markets, they become expensive. That time, the only options you're left with is alternate assets like gold, or you can hedge your portfolio, or you can move into cash. So this is a cycle what INVasset operates in. We do not leave this cycle. What happened with INVasset when the underperformance came, we were not able to shift from growth to quality on time. This was a cognitive error, Kamal, where the algorithm, the system, the framework was telling us. But we as fund managers are also prone to bias from time to time, and we did not take the correct decision. I acknowledge that fact. We have corrected it, and I think the algorithm is and the framework is more robust now. Going forward, why this cash call is a collective set of events. Firstly, we believe that if we look at the last 3 months, okay, the Indian markets have topped out at around 26,300 levels, and at the same time, if we see that the US dollar and the US dollar index, it started bottoming out. The Fed was signaling rate cuts, but both these US dollar and the dollar index was going up. The same phenomenon was seen in the 10 and 20-year bond yields. This is a very, very clear indication that the FIIs particularly are now preferring what? They're preferring the US debt over Indian markets. Now comes the other factor, the numerator factor. When we talk about the growth of Q2 was at 7-quarter low. And if we compare the coming quarter, the Q3 of this Q3, if we compare it with last year, the last year was the highest, and this year we believe that it will not be able to match it. So somewhere we believe that the market valuations will become more expensive as there'll be a lack of growth. So all these factors have led us to believe that it's actually the right time to sit in cash. We have done it in the past. We did it in September, 9th of September 2021, verifiable facts. We shifted to cash, and we came post the Russia-Ukraine war crisis started, and we saw a correction in the markets. So generally, I believe that we are all investors. Be me as a fund manager, I'm an investor myself, and it is okay to stay in cash for some time. And when you get the right opportunity, then jump into, and make the maximum out of it. So going in cash is a very, very strategic call, a permanent part of our portfolio execution strategy. And we take it whenever we feel that the markets have entered into an exuberant run.
Sure. So as of now, there is no reason for you to go back to equity. You are not seeing any such signals coming ahead, say in the month of January, or you have some timelines planned or some events you are looking forward to when you will again move back to equity. What are those yardsticks or measures that you are looking, which will kind of make you again kind of move back to equity? What is the strategy, again going back to equity?
Yeah. See, so this is a very, very clear strategy. Either the growth comes back again, which takes time, or the market corrects itself. So we have to depend upon the latter part. Now, the market correcting right now, there is a lot of important events that are coming in the next 2 months. Donald Trump swearing in as the president is one, can create a lot of hustle. We know he's famous for that. And then the most important factor for India is the budget. Post the elections, what happened, Kamal, is that this government was given a lot of, given a higher multiple as compared to the rest of the world. Why? Because of their pro-growth policies. The Indian government had been pro-growth, and that is why the capex run, which was, led by railways, defense, infrastructure, and power, came into being, and we made the maximum out of it. Now, post the elections, they did not get the required number of seats that they hoped for, and somewhere we can see that the trend from capex going towards populist measures. We have seen it in Maharashtra. 46,000 crores is expected outgo in the Ladli Behna scheme. And where is it going to come from? It's going to come, capex is going to take a hit. And now, since we are seeing the dollar rising, okay, we are seeing the imports on a heavily import-dependent economy, the US dollar versus the Indian rupee. The Indian rupee is at its all-time low. We are at 86. And where is this pressure going to take? Ultimately, somewhere, there has to be a correction in the market, or even if a correction doesn't come, it's okay. I have a duty for my investors not to be invested for them in expensive markets. There will come a time again where we believe that things would be right. A lot of volatility is expected in the next 2 months owing to these events, and these volatile events and this volatility often leads to panic bottoms in the market. You get all those good stocks that you hoped for, all those good, say somebody likes an airline stock or somebody likes a food delivery company, all these companies will be available at better valuations from today. That is what I can tell you. And that is where we will, go in for, as I told you, value is our stage one. We'll go in for buying value for our clients as and when it presents. So yes, we are very confident in the next couple of months, we should be invested again as we have done it in the past.
So you believe that in the next couple of months, market will go back to the value stage from, currently being at safety stage. Within 2 months, we will see such a drastic fall in the market, or how will you eventually, be able to convince yourself after going back in cash, at what valuation, what that is still unclear to us.
So I believe when we talk, if I have to quantify it with numbers, if that gives you more clarity, see, never ever the small cap index in India has bottomed out with more than a 20% fall. Okay, with less than a 20% fall. So there is still a lot of downside that is available in the small cap index. I'm talking about, you can talk about any index, the BSE small cap index, which is a more inclusive index. And then Nifty, we believe, should, according to what our systems are telling us, any levels sub 22,000, we are buyers.
Sure. Given the,
I would like to make a point here. Kamal, a question can arise here is that if you see Nifty just at 22,000 levels, which is around 10% down from here, then why are you moving into cash? I have to focus on a fact here that if you look at your portfolios, if investors look at their portfolios today and where growth is there in mid and small cap more than it is there in large cap today in this old economy run. So if the Nifty falls 8 to 10%, there can be a 20 to 25% fall in your portfolios from all-time highs. I am not ready to, make my investors suffer that loss when my systems are telling me that time and again they have been right. I as a fund manager can commit a mistake, but the systems are always right. So it's okay. A 20 to 25% fall, it takes, if there is a 25% fall, you need a 25% rise to complement it. And I'm not ready for it right now. I believe that there will be better opportunities going forward.
No, sure, Anirudh, I buy your point. The only concern is that though valuations on small cap side are kind of blatantly expensive, that's fundamentally understood by all of us. But will correction come in next 2 months or next 6 months or next 1 year? That timing no one can do. If correction doesn't happen in next 2, 3, 4, 5 months, then will you keep sitting on cash?
Yes, absolutely. Now let me focus on a point here. If we are all investors, and what is our primary motive here? The primary motive here is to earn money and not be always invested in the market. Okay, are we such compulsive investors that we have to be in the market after markets have shown such significant gains in the last 2 years? Do you think markets are, not you, but do we think that markets are money making machines where you just bring in capital and a lot of money will be made? Markets are very, very rational systems where you have to ensure that you buy when there is value in the market and you get out when the markets become expensive to exuberant. That is what we are doing. And I think that is the right way to approach the markets. Having a 7-8% debt returns right now for some time, it's all right. That is the returns that you're getting as a PMS. When I invest your funds in debt funds or something, I'm not getting anything out of it. So for a PMS manager to take a call like this, he has to be 100% convinced, because the fund is not making anything out of it. It's just for the protection of the interest of my investors I'm doing it. And I think that is the right way for a long-term investment framework.
Sure. Suppose you have, taken this cash call, have you come across any particular, I would say, event that has kind of made you feel that, you are absolutely right, or that has made you believe that, I think, you need to again go back to equity soon? You have taken a very, I would say, drastic decision, because obviously every day events are unfolding, right? After that rate cut happened, and then yesterday markets went up. Maybe soon Trump will join and he will do some announcements. Budget will come. There are certain, I would say, all these cues are coming and going. Right now, quarterly results have started coming in. Yesterday, Eicher Motor results had came, and likewise, you see market in front of you. some of the stocks that you have sold may start to rise in front of you. Obviously, you will have to keep patience, and if you win, that will be a very big win, because this is like, I have never seen any such fund manager who has taken such a drastic call. Though I can tell you, after a fall, almost all clients who today may be feeling concerned, when fund managers did not take a cash call before COVID or before subprime crisis, those same clients were questioning that why the hell, my fund manager did not take a cash call. Today you have done that, and investors are concerned that why have you done that. Obviously, it's like, hence I am wanting you to kind of present it to us, a full-fledged strategy which you have in your mind, or some, I would say, cues that you're looking forward to, any timelines that you have kept for yourself, because this call cannot be just taken and then left and then wait for valuations to become attractive. There will definitely be some timelines. I'm sure every day there's some discussion going on, in your office, some kind of, I would say, investment committee you have. What process, what investment committee, what discussions are happening these days? What is happening in the background is what investors want to know.
Okay. So Kamal, we have our strategy running in the background, which is a total quant strategy. It dates from 1st of January 1987 till yesterday. Today's would be prepared this evening, and we have our own performance, which we have delivered. We continuously keep checking where we as fund managers have been lagging to implement those strategy is one thing, if we do, or where we have done better than the strategy, if not totally implemented. And the second thing that we see is that whenever we see these valuations in the market, how those valuations have played out. Every time the valuations have become expensive, the markets have corrected. The time period has been anywhere between 3 months to 6 months. So we are okay. We are totally okay sitting on cash for value and waiting for the valuations to correct. We are in no way chasing whatever is going up in the market right now. It's not bad to chase as well. It's okay to chase as well. But at that time, the valuations in the market should be all right. Right now, everything is goody-goody in the market. And somewhere down the line, there will be a correction in the market. And it's okay. Why? I think if other fund managers, all respect to them for whatever their strategies, I believe everybody is right in the stock market with their own bent of mind. But if anybody has not done it in the past versus I have done it in the past, I am okay with it. We, exited for clients in September 2021, came back in March 2022. We have done it for ourselves in the past as well. So I believe it's perfectly all right to sit on cash, and that is a part of investment. That is really a part of investment that everybody has to learn into, and including my investors. I was talking to a lot of investors. I've talked with a lot of investors in the past couple of months. The only thing that I advise them is that when you are investing with a particular fund manager, you are invested not with a strategy, but according to the psychology that fund manager operates on. And my psychology is very, very clear. In expensive markets, in the Indian equity markets, I am not a buyer.
Sure, Anirudh.
Either the earnings kick in or the valuations correct. That is the only two factors that can make me enter the markets again.
Sure. So you had also mentioned that every bull run has new leaders, and you also mentioned that there is a quant which has 3 decades of data behind it. And obviously there is some planning that you're doing on kind of trying to gauge which are going to be next leading sectors which will lead the subsequent bull run whenever it begins. I want you to maybe address now your thinking on that side. Like, leaders of this bull run, we understand the stocks which have been leading this bull run were primarily, as per your language, from old economy. And then those stocks and those sectors have maybe probably become expensive, which is what is making you kind of now taking a back seat. For the time being, you entered into quality or the large cap side of market because that was relatively less expensive. But now you are kind of seeing that yes, next bull run, whenever it will come, it will have new leaders. What are those new leaders? You have any understanding of that at the moment, or you think that's still not understood? That's still a kind of a hazy picture.
So see, Indian markets or markets world over are comprised of 3 type of companies. The first is interest rate sensitive, something like your steel or all these cyclicals. When do they perform? They perform when you have global growth and global inflation under control. Okay. Both are not the scenarios right now. The Fed has clearly mentioned that the inflation is not under control, and global growth, we are seeing China's yield going under 1%, and things are in a problem. We can see that in India as well. Our Q2 growth was at 7-quarter low. Then you come to the the capex runs. The capex. Now, what has happened with capex is that capex was the only theme available in this old economy run, and it had reached valuations where these valuations were not sustainable. So these sectors can become attractive if there is a lot of correction has come in these sectors, but somewhere we believe that there is still some more correction due to find more attractiveness in this, to commit my funds to these sectors for the next 2 to 3 years. Last comes extraordinary companies which do not need any external factors. We call them the Warren Buffett companies, the companies that you can buy and own forever. Yeah, something like a Zomato, something like a Indigo. The 5 sectors that I believe work in these are: firstly, consumer durables, FMCG, pharma, IT, and very, very good financials that you see in India, something like a HDFC Bank or a Bajaj Finance. Now, all these quality in the last 6 months, since the run for capex ended, the run in these sectors started, and now these sectors are also quoting at exuberant valuations. Now, when these sectors come down, when there is significant correction in them, there will be an opportunity to buy in these sectors as well. And then, of course, as Donald Trump is coming, the China +1 factor will come in. USA, we believe they are very upbeat on the US manufacturing. So all the sectors that are supporting the US manufacturing would do well. And somewhere the sectors that are out there are chosen, but the valuations are not right. Again, the capex sectors and the Warren Buffett companies, the good companies, we are waiting for the right valuations to come.
Sure, Anirudh. So, let's go back to 2024 and maybe discuss some bit of, quarters where you are underperforming, and where you acknowledged that, there was some bit of mistakes that you had done. So what were the reasons for those mistakes, and what have been the learnings from those mistakes?
I think if I put it very, very blatantly, the reason was me. The reason was Anirudh Garg. My system was telling me that, okay, the stocks are now exuberant and somewhere you should shift. And we wanted to get the maximum for our clients. We wanted to sell at the very top, which we know is not possible. That is somewhere we lagged. And now we've corrected them. The risk reward measures, the risk measures at INVasset are much, much stronger than they were earlier. And also, rather than taking a decision at one go, we have shifted it into tranches so that we know how to identify the winners. But it is how we see it in a bull run. Since we know that every bull run is led by new leaders, it is very important to acknowledge find out the new leaders, allocate the right capital to them. But at the very end, if you are very, very successful and those leaders, they become exuberant at some point, it's very, very necessary to get out of them as well on time. It's okay to leave the last, you cannot be exiting at the very top. So it's okay to leave the last few bucks on the table rather than taking a drawdown and then taking the decision, is what we've learned. And we are very, very confident that going forward, the implementation would be much, much stronger than it was this time. And saying that with every fund manager or with every fund, you will have these periods of underperformance from time to time, but you should focus at your overall 3-year return. If the overall 3-year return is fine, then I think everything is okay. If we talk about INVasset, our 3-year return is still 2x of what the benchmark has done. And I think it's very, very difficult. It's easier said than done, but it's very, very difficult to give investors a 2x return on the benchmark post all expenses and fees, is what we have aimed for, is what we have delivered, and we are very confident we'll be able to deliver it in the future as well.
While, when you started, I think in March of 2020, till I would say December of 2023, your performance has been good. I would say it is like far ahead of many other strategies. But in 2024, when you started to get a lot of clients based on the track record of those 3 years, your strategy started to underperform. Many investors, whenever it happens that when new investors start to come in and that influx of new capital comes, that maybe leads to at times fund manager kind of fizzling out in terms of his perspective, going away from fund management to maybe client management and sales. It happens. Was that also one of the factors that led, because you have kind of agreed and acknowledged that it is you who could not take that right call, your systems were telling? Because if that is the reason, then it is important for us to understand, because it's like, what is your team, how is that team structured, and how do you confidently say it's ultimately hard-earned money of investors that they want to understand? Because at one point of time, I know you were saying that you're opening offices in Dubai, opening offices in various parts of India, and obviously your things were going very good, and we are still very confident. I am not at all questioning anything, because your
Yeah,
cash
absolutely.
call that you have taken recently is fundamentally right call. It looks to be right, and you can see, I have raised a poll right now. 20% of people though agree with you that yes, they agree with the cash call that you have taken, and it may go in your favor because markets definitely are looking definitely fragile at the moment. But having said that, the errors that happened in 2024 in between, and you have acknowledged those errors, so I'm sure you would have yourself gone through some hard days, hard nights, and would have done introspection. You have to kind of share more on the learnings,
Okay.
and
I'll tell you. I'll tell
how
you.
are you confident now?
I'll tell you, Kamal. First of all, let me correct it a bit. Up till 6th of July 2024, we were the best performing fund in the country. Okay. Our performance for June as a fund was around 30%. Just in 1 month, we did 30%. And I remember all PMS distributors, clients, everybody complimenting us, including you, that wow, what a strategy it is. And I confidently remember telling you that, Kamal, this is a time where profit should be picked up. But as is life, as is like you are doing any business or taking any decisions, sometimes you falter. But the point is, the strategy is well tested. You've done it in the past. We are very confident we'll do it in the future. In my organization, I'm not concerned about sales at all. I think you and PMS Bazaar are the only distributors we have. We are not AUM oriented fund, and all of us know, if one has to be AUM oriented, then you should have something like a fixed fees model where distribution can be done in a very, very effective way, leading to a AUM growth. But with us, we are a pay for performance oriented model. We want that we should only and only earn when our clients earn money. So please, let's address that fact that one error occurred due to which we were not able to deliver in the past 3-4 months what we had hoped for. And these errors, they occurred from time to time. The best you can do is you can acknowledge those errors, work hard on them, and just leave them in the past and look for the future. That is what we are doing. I am not a sales oriented person at all, Kamal, to answer your question. It is just that that gain of 30% that came in a month, I did not digest it that well. And yes, going into the future, we know that if our approach is that capable, that there will be a month where we can make 30%, our approach will be different that time.
Sure, Anirudh, well put. Thank you so much for sharing your heart out. Now let me ask you another aspect of, right now you're sitting on 100% cash, and at one point of time you had mentioned that you can move to safety net like gold. Why have you not put money in some of the other fixed income assets? Why you're sitting completely in cash?
No, so this is totally fixed income products that we have put the money in. We are earning good 6-7% for our clients. There can be a couple of products where we can earn 1% more, but in those, like, you can put it in arbitrage funds or something. But those funds, they take a lot of time when you have to transition back into the value stage. They take like 3-4 days, and whenever there is a capitulation that happens in the market, you cannot wait for 3 to 4 days to get the client money out. So we are sitting in the 6-7% product right now. Gold, why we ain't gone? Because we believe that this is not a bear market correction as per se. If we believed that the markets were entering a bear market phase, we would have been in gold, because gold delivers wonderful returns in bear markets. From January of 2018, Kamal, just for your and for our investors, whenever we shift into gold next time, from January of 2018 to March of 2020, gold had given a 50% return, while the index was down 15%. From January of 2008 to November of 2008, gold was in India was just down 5-6%, while the markets were down 66%. The Nifty was down 66%. So gold becomes an extraordinary product in bear markets, but in bull market corrections, since you are not moving into alternate assets for a longer period of time, gold is not that good a transition, because then it involves too much timing, and often as we say, the more number of decisions you take, the more wrong you can be. We do not go in gold for bull market corrections. That is why we are right now in cash, earning good 6-7%, which is going totally to our investors. And whenever we find opportunities, we'll go to the value stage again.
Sure. You also mentioned, in the beginning, when you were trying to distinguish yourself from other PMSs, that you have very high skin in the game, in fact, highest skin in the game.
Yeah.
Please elaborate, this 100% cash call that you have taken for clients. Does this apply to your own portfolio as well? Or, there you have a different kind of a ball game, because obviously that money is not...
Kamal, the day I feel that my portfolio is not a replica of the portfolio of my clients, I will not do fund management. I have a promise with my clients that whatever is allowed in a PMS, I will always do the same for me and for my clients. There are some things where you're not allowed for your PMS, like suppose there is something called options arbitrage, which you are not allowed to do as a PMS fund manager. For that, we are bringing products like AIFs going forward. We have applied for both Indian AIF with the SEBI and as well as the GIFT AIF, where we believe that when we are in products like cash, and when we do not feel that the market valuations are right, our clients can earn extra income from arbitrage opportunities as well. So for us, our portfolio is exactly a replica of our clients. We ourselves are in 100% cash.
A lot of new investors have, come in stock market, equity markets over last, I would say, 4.5 years, especially, after COVID. And for those investors, they have not seen any big correction. Only they could see a little correction in 2022. But, since then, small caps and mid caps especially have kind of given massive returns. And I can see many such investors today think themselves as kind of as smart as some of the fund managers. But at the same time, you who is a smart fund manager and has actually taken a cash call, how would you want to address, those investors, or what do you want to kind of say to those investors?
Okay, first of all, I would not call myself a smart fund manager. I would call myself a reasonable fund manager. Okay, a reasonable fund manager is somebody who would reason why he's doing a particular thing. And as it is markets, they move in cycles. Why would equity markets, reward you more than the fixed income guys? They reward you only because you're taking the risk. Okay, when you're taking the risk, things can go up, things can go down. So when do you enter the markets? You enter the markets when there is a lot of gloomy news in the markets, when the valuations are right, but nobody wants to enter. When do you exit the markets? When there is a lot of money which has been made. So, whenever I remember back in June of 2022 or during COVID, when we were telling investors that this is the right time to come in, investors were too scared. Why? Because the returns of the past 2 years in the equity markets at that times are not great. Okay. At the top, where the past 2-year returns are very, very good, everybody wants to enter in the equity markets. People question when you move into cash. But that is the beautiful thing, that your belief is more strengthened when people question that you move into cash. Why? Because everybody is looking at the last 2-year returns. Last 2-year returns is getting more and more capital into the markets. Last 2-year return is making sure that the promoters are offloading their, offloading their stocks and their interest into the business at extraordinary valuations. Look at what happened with Hyundai. These things, where is that money coming from? This money is coming from our retail investors who have joined the market. And I have seen all, I can't say I've seen all, but I've seen a significant part of the US market. I joined in 2006 and I've researched back since 1987. Whenever a bear market comes, a lot of money is lost. And as fund managers, it's not only a duty to preserve, not to only to increase and generate alpha, it's also a duty to preserve capital also. And that is what we are focusing on. I request investors just to come with a 3-year perspective. If put simply, come with a 3-year perspective. In that period, you will not have, any problems. The problem happens when you come in with a 6 months perspective, 1 year's perspective. If we talk about INVasset, let's talk about INVasset's return for financial year ending March 2024. From 1st of April 2023 to 31st of March 2024, we delivered 120%. Post that last 1 year, we were just at 7%. So one has to make sure that money will be made only when there is value in the market, only when there is growth in the market. When these two factors lag, there is a good chance that you will not make money, or money can be lost as well. This is the nature of equity markets, and we all have to respect it. Otherwise, market will make sure that we respect it in the future.
Sure, Anirudh. There is another, I would say, piece of concern generally, which most investors have, because most investors who have made money in last 4 years, or I would say actually very seasoned investors who have decades of experience, they feel that yes, 2025 could be a year of zero returns or negative returns. And obviously equity markets do not work linearly, and we kind of do not question that. We are also aware of the fact that there could be a possibility of like 1 year overall being like, relatively year where equity delivers returns even less than fixed income. What are your views, when we kind of are sitting at the beginning of 2025, if you have to set some, I would say, foresight about 2025, how do you see year 2025 going for equities in general?
See, in general, we feel that this will be a year of somewhere, will be somewhere between positive returns. We are not, we don't think there will be negative returns for the full year, but I believe it will not be as good as the last year for sure. And somewhere Nifty not doing more than 10%. But when it comes to stocks, we believe a lot of stocks this year will, have newer highs. We'll see a lot of sectors coming out from ashes and delivering returns to the investors. So it will be a combination of capital preservation. If you're able to preserve your capital when the things go down, and then find out sectors where relative change is maximum, where things have improved, which the markets will discount for the next couple of years. This is this has been happening in equity markets again and again for the, I don't know, last 30 years. I can confidently tell you this is what has been happening in equity markets. You just have to be rational enough to respect it.
No, sure, Anirudh. So let me just give you, some highlights. Last month, like December, markets were, I think, down 1.5%. There have been some PMSs which have delivered even 3.5% positive return. Some AIFs which were investing in IPOs or pre-IPO, I would say, kind of companies where IPOs came because there's IPO boom which is going on. In last 1 year, we have seen more than, I would say, 87 IPOs that have come in India. And those funds have delivered even more than 10% in single month. So obviously, like you're saying, it's a fact that there are, I would say, pockets in the market, be it in the pre-IPO market or be it in some sector which is coming up from ashes, as you said, where money is being made. But obviously, your quant is waiting to be more confident, given the overall market valuations, for it to deploy that holistically. And we are also equally waiting for it, in 2025, for you to kind of deliver that. Absolutely with you on that. But at this juncture, where you see around yourself in the fund management fraternity, I do not want to take names. I'm sure you're well aware. Like, you're sitting on cash. There are these fund managers that I'm talking about who are able to find out these opportunities, and the corpus that you have to deploy is not that large. It's like 400 to 500 crores, which can be deployed and where money can be made, but that's an opportunity loss for you at the moment. For those investors, because those investors are invested in those strategies also, and they compare that yes, this PMS in December has delivered this return, but other PMS sitting on cash. Right. So how do you want to address that concern of investors, which is a practical concern? Or how do you see some of those, friends or competitors of yours in the industry when they are kind of, making these returns and they have not gone and taken cash call because they are equally experienced like you?
Absolutely. So see, first and foremost, as an investor, I believe I am an investor first and a fund manager later. As an investor, you should specialize in one thing and not, run after everything that is working in the market. We have seen, as equity investors, we have seen the coins rising, the Bitcoins and everything, and then we've seen them collapse, rising again. So as an investor, there are multiple strategies in the market, but you should focus on what you know. It is not necessary that everything that is happening in the market is for right. And as far as the IPOs is concerned, I am too much scared about it. I don't believe that a very, very optimal allocation of funds is happening in the equity markets when it comes to the IPO space. And it's just that because of a lot of retail interest, the only people that are making maximum out of it is the taxmen and the promoters who are able to offload their equity at exuberant valuations. So I believe in what I know. I want to fulfill the target that I've set for myself. I want to do 18 to 28% over a longer period of run. I know if I'm able to do it in the next 20 years, say in the next 30 years, 1 crore invested with me will turn into 1,000 crores. And until and unless I see my strategy not living up to it, I will not change it at all, because it's a very, very generic strategy. It is something that has worked in a similar fashion in the last 30 years, and I'm very confident that it will perform in the future as well. So I don't wager into I use the wrong word. I don't get distracted by what other people are doing. I've never ever as a fund manager and an investor, I've never ever seen what other people's returns are. I always focus on my returns, and I always respect my other fellow fund managers who are doing very, very quality work in the field, as we have highlighted in our conversations from time to time. So let's focus on what we know and not what other people are doing. I advise investors also that, if you keep on comparing all the time, then ultimately somewhere each strategy has its own point of investing. Let's talk about ourselves. If somebody in financial year 2023 and financial year 2023 shifted from INVasset to some other fund, they missed out on the biggest alpha that we made of 123%. You have to be confident on your fund manager, give them time. Yeah, over a 3-year period, if your fund manager is not able to deliver returns, you should surely think of some other options. I myself, as an investor, as a fund manager, will ask my clients, if I'm not able to deliver over a 3-year period, that you should choose some other options, because me myself as an investor will go in some other option if Anirudh is not able to deliver. So the only role for money is to grow. You have to decide what percentage are you okay with. I'm okay with a 18 to 28% CAGR. I am more than happy with it over a longer period of time. In the shorter period, I want to do 1.5 to 2x of what the Nifty is doing. And I think till we are able to, do it again and again over a longer period of time, we are perfectly okay. And we do not need to look at what other people are doing.
Sure, Anirudh, would you like to spend maybe, last 10 minutes of this webinar seeing some of the questions in the chat box, and would like to answer some of those?
Okay. There are a lot of questions. Wow. So guys, I will not be comparing INVasset with other fund managers. There's this name that is creeping up again and again. Thanks to my friend who's delivered wonderful returns. I'm so happy for him. Well done, Amit. But if you look at from where INVasset started, we started on 8th of January 2020. till today, I believe the returns are exactly the same. We all have our periods from time to time, and for okay, what is the maximum drawdown that the INVasset PMS strategy has faced since inception? That was 27% during COVID, when the markets had a drawdown of around 28%. Okay. Yes, when it comes to churns, no, we do only 4 churns, in a run. Value, growth, quality, and safety. Why you see a lot of churns? I'll explain it to you. When we are shifting from a particular stage to the next stage, suppose we are shifting from growth to quality, it will not be done in one instance. We have to change 500 crores of assets. It cannot be done in one day. So they say, if they're being done over a 20-day period, you will see that your portfolio has 25 stocks from value growth stage and 25 stocks from quality stage, and your portfolio will look like, oh, this fund manager is owning 50 stocks. What is he doing? So that is a part of it. Your portfolio cannot be how you want it to be. It has to be how the fund manager has planned it to be. And we will look into it, that when you say a lot of churns, but yes, somewhere we will reduce these churns as well. If yes, in the last 1 year there were a couple of churns. We will try to reduce these churns as well, Rajesh ji. And somewhere I believe that we should focus on the 3-year return more, rather than focusing on each and every small aspect of what the fund manager is doing. Because otherwise, for Kamalji, this is something that is worth mentioning here. Sometimes what happens is that a lot of investors, a few of them are present here, they keep on calling you and they keep on suggesting you what to do. And somewhere as a fund manager, you face pressure on taking the right decision also. Okay, according to you believe that this is a right decision, but see, when we're talking about churns, we need 4 churns. That is a part of our portfolio. The investors cannot decide it for us. So we are very confident that what our strategy is. I would request all my investors, just see the strategy in full. Ask any of the investors who have been invested with us for over a 3-year period, and they are very, very confident on what they've built in this period. So churns, we'll try to keep them to 4, as we have promised with you. And as we told you, one thing is there, but that we were not able to capitalize on the gains that we had hoped. We will have better risk measures for you, and we'll be able to capitalize on those gains much, much better. Apart from that, a couple of investors, they feel that the communication from INVasset is not what it should be. I believe that I think we are one of the most customer-centric funds. We form individual WhatsApp groups for all our investors, in which me as a fund manager is available. I get around 30-40 questions per day from my investors, which we answer. In case we have missed it, please post it in your groups. We have gone apart from that email thing, where we want to give you a more personal touch. And in case you're not able to get a comment from me on your question, please, you have my personal number in the groups. You can always send me a direct message, and I hope that this is something that we are confident on. Maybe with a couple of investors, things got lost in the way, but we are very confident that we address each and every concern of every investor from time to time.
Sure, Anirudh. Any other question that you see in the chat box that you would like to address?
I think we have answered a lot of them. I think that's it, Kamalji.
Do you agree with this, comment of one of the investors or client which says that basically, which says that generally the quant style of funds outperform or deliver alpha during the, when markets are like simple and rising in one direction. But the moment one, market goes through a consolidation phase and change of hands and change of sectors happen, change of leadership happens, quant strategy underperforms. And then hence, when market goes through both phases, ultimately quant eventually is unable to actually beat, I would say, a genius fund manager. Do you generally agree to this aspect?
No, I totally do not agree to this fact. This is coming from somebody who's not had experience in the markets. Quants can actually be much better when there is a change of hands, because quant funds tend to acknowledge the fact that markets can become exuberant and we need to change, while traditional fund managers, they can just stay expensive. This comment comes from, I believe, a 6-month performance, and not from an overall performance. It is quants that can make you exit and not enter 2008 financial crisis. It's quant that can make sure that you do not enter a big correction with you're totally exposed to equity. Quant has that ability to do so, while I believe traditional fund managers do not have that ability.
Sure. The way you have taken cash call now, this is the last question, based on almost all the questions that have come in the chat box. I'm just trying to ask from everyone's perspective, the 100% cash call that you have taken right now. As you started in this webinar, you said you have a 30 years of experience in terms of managing money, initially as a proprietary portfolio and then as a public markets. Have you taken such 100% cash call ever in the past?
Every 3 years, every 2 to 3 years, we do that.
100% cash call?
Yes.
Last time you did this cash call, what was the event?
9th of September 2021.
And that was also 100%?
Yes, 100%.
And you remained in cash for how long?
Till end of February to early March 2022.
Sure. Perfect, Anirudh. I think it has been really pleasure conversing with you. Thank you so much for your time for this webinar. If you want to kind of give any finishing remarks, you're most welcome to go ahead.
My dear investors, please believe that fact that Anirudh Garg is experiencing the same pain that you might have faced during this brief period of underperformance. Believe in us for the next 2 to 3 years, and I'm very sure and confident that all the doubts you have in mind will be taken away. Fund managers themselves are also human beings. They can make errors from time to time, but when the overall strategy is right, when the fund manager is so confident that the 100% of his wealth is invested into the same strategy, then things will turn out right. We have done it in the past, we'll do it in the future as well. Rest, any question you have in terms of when it comes to client servicing, that is something that I'm more concerned with. If you have any questions, please get back to us. You have my personal numbers, you have my personal email ID, and we will try to resolve any query you have within the next 24 hours, whenever you put the query. And if something is not happening right, you can write to our info@INVasset.com also. I will personally look up to it. I'll take all the comments that are here. I'll take, copy them, keep it in my keep it in a file, study each of them, and I'm very sure that any concerns you have will be addressed.
Sure, Anirudh. Thank you so much again for your time, and thank you everyone for joining us. PMS AIF World, every Friday tries to organize such webinars for our clients. We are all trying to realistically help investors, assist investors kind of make money in a well-informed way. And at PMS AIF World, when we do such webinars with fund managers, we ourselves learn a lot. And thank you again, Anirudh, for giving your time, and thank you everyone for joining. Thank you.
Thank you.